Greetings, market rebels. Welcome to this week's sector situation. It is Sunday, April 2nd, 2023, a little bit after 12:30, on the East Coast. And I'm Wayne, my partner Ryan, is out and about somewhere, but we'll be getting the market outlook and market overview. And there's these videos, this including macro measure, posted, later today. Here's our trusty disclaimer for Market Rebellion. Here's our trusty intellectual property rights notice, if you could study that thoroughly for me. And then, let's see, here's the plan program from last week that we shared that with a few modifications. I'm just going to leave that up in case anybody wants to screenshot it or something like that, or just pause and do that. This is just reminders if you try to keep track of different things. This week's I'll flash up there, but these were really covered in what probably was the longest macro measure video I think I've ever made in the last 18 months to 2 years that we've been doing it. So it's all over there. Go find macro measure and we'll talk about it in my typical kind of like all around stream of consciousness way, because honestly, it's just so remarkable what's going on this year. It's been an incredible year. The first quarter's in the books, and let me just stop share and kind of reposition here for us so we can get started on the sector situation. And for a change, we'll start out directly looking at sectors because that makes, I think, the most sense. Just pick the right screen to share, and we should be back in business. No, it's this one here. Okay, share. So this is the typical grid of 12 that we start with, and the message really in terms of sectors is that it was risk on again, right? I think a lot of things were, and I alluded to this in macro measure, a lot of things were looking pretty bleak, that we had some really narrow leadership. And then, lo and behold, for all the reasons discussed in macro measure and probably more, we had this remarkable turnaround in the last really 6 sessions where the bulls went haywire, found a way to go haywire, broke out of consolidation in the major market index ETFs, SPY mainly, and the QQQ. And it's been, a little bit of a brief pullback early last week and then go in a remarkable way. And really, you can look across the board, and no matter what we look at, they pretty much came after it. Some, of course, more than others. So a lot of things that they had liked before, which we talked about this, a lot of things they'd liked before, like materials and industrials, had gotten hit pretty hard, and things that had backed off pretty hard that they previously liked, they came in for rapidly, basically, like gangbusters. XLY, which had been really kind of bottled up and struggling, which made sense, right, in an economy that's becoming, I think, more and more concerning, that went haywire to the upside. I think we had costs in some service, but I remember that we had Walmart and TNT, and we had Target, I think, at least in UOA Pro, maybe UOA Essential. There were other ones, of course, but you get the idea. But really, right, we look across the board now, and the formerly high flyers also put new highs together. Now, they probably didn't move as much as some of the ones that had gotten beaten down, which is why some people like to go right back into the leaders when the trend emerges or reemerges. Some like to buy the ones that are set to bounce, like we talked about. But really, what can you say? Even if you look at all the RSI readings, and this kind of dovetails with what we've been saying, the ones that are higher on towards the overbought level are tech and XLK and XLC, right? Little bit here in staples because they kept going as well, and they were kind of hanging out, holding out better than others. So they all became closer to overbought, but a lot of them, right, even discretionary, because it became absurd quickly, that got into the 60s, but a lot of them are still nowhere near 60, 65, and certainly not 70. So there could be more upside, of course, as a result, and you're not near overbought. The problem, I think, is I covered in macro measured, is that you're short-term overbought on a lot of things, like mainly the 1 hour charts. There's very high RSI readings. So I think if you're going to say, well, the bulls really turned the corner, which I think they really they really did. I think it's hard to deny that it wasn't an extremely bullish finish to the first quarter. That though does call it into question, because that's kind of gets you towards, well, was this end of quarter window dressing, end of quarter markup, end of quarter short squeezing? Was it zero DTE kicking in? Was it bearish sentiment? Was it poor positioning? Was it the yield curve completely changing to a much more dovish outlook as priced by the markets by really the end of the summer? Is it the earnings season that comes up? They try to treat things favorably. There's so many things, but it really shifted. We can't deny that. We could see it here. But what this tends to do is make it hard, right, for us to do what we do in sort of a, let's say, neutral to bullish market, when this, I think, is really beneficial, which is start to see what sectors are emerging, right, where they're sort of shifting from one sector to another, where a sector that's had a great run starts to sort of lose that momentum, and then something that's been out of favor starts to gain momentum. We did that during those phases, but that's just not where we are right now. And all we can really say now is, I think, to go through these sectors, talk about the RSI readings and some other factors, and look at some of the other futures that we look at, things like that, just to get a sense on where things are, as we always do. So that's really my plan, because I don't have anything to really share, I think, that's extraordinary about this rotation. Maybe, look out for this to continue to happen, that kind of a thing. This is the SPY right here. And the talk we had last week, and we flashed it here, and there's some of the slides, was that wait for it to leave the triangle, and then, try to go with it if you can, and see what develops. And that was really the breakout right there. So there's the breakout from the triangle or triangles we'd been in recently, and now they broke it to the upside. They've got it going, got to our 408, 409-ish level we've been talking about for a while. I think it's a big level. I think it shouldn't go through for long without news. Could there be a gap up? Yes. I do think if there is, I think I would sell into that with any overrolls. I noted I personally would have kept about 25 to 30% of my long position, close out the rest, overrolled what I held. They gap it up. I think RSIs will be so extreme in most cases across the board that I would sell into it and then just look to reposition, because I think you never know if you get a gap up opening. But let me just grab this particular screen. I'll move this over so we can go through these methodically. And then from there, I'll actually probably better if I put those up there. And then we'll go on. So let's start out at the top. I'll take a look at the XLE. We've got XLE up there. And this one's been a tough one and to trade. And that's not it. XLE, there we go. My keyboard is so beaten down, I just need to get another one. But XLE, right, let's just quickly look at that situation. This has been a tough one. We are fortunate enough. I think we got some good payoffs and some bearish ones. We kind of noted that maybe we'll see if it can hold here and go. It did. The news seems to have really swung around in XLE. So keep an eye on it. If it's able to break, same old problem. If it's able to break through, I think it's fair to say we could drop a resistance line here now, probably right around there. And this is going to be big. So, excuse me, there will be that resistance line I just drew. I think there's flat line resistance right near there in the near future. And I think the 50 will be working its way down towards there. So that should be an interesting juncture. Let's just cover that right now. RSI at 53 on the daily, RSI though at 68 on the hourly. So again, just even that space, which it does its own thing. You need to be careful right now because it is approaching overbought. Look, this did correct. We were fortunate that we caught this, didn't get trapped at all really, and avoided trouble. I feel really fortunate because that was some tough trading. We stayed away from it largely. We had a couple things here and there. I think most of them actually worked out pretty well. So if you can, when it's tough to trade, and if you can still eke out a couple of good ones, that's always a positive in my book. But look, higher lows, right? So lower highs, a couple of them. So we'll have to wait and see. But this also, in a way, feels like it's in a triangle, or it's maybe going to form more of a triangle. We'll have to wait and see clearly. But the weekly RSI has more room. So short-term overbought, room to run on the larger term. Let's take a look at the future while we're here just to take care of that one. They didn't hear me. The support crew there didn't hear me at Thinkorswim. There you go. So here's the May future, and there you have it. We did the old Thinkorswim switcheroo. Got me over to percentage, which I don't want. Let's just get a quick look, but clearly, right, the futures moved back up. That's certainly much better than it was. I think we noted, right, when Bollingers were narrow, but even when you get out of Bollingers, I just think you got to keep it on your lower Bollinger. In this case, you got to keep it on your on the back burner that, hey, you know, this thing did kind of get a little overdone there, and this kind of thing could develop. And you're right at the 50 on the daily now. So we were looking at weekly before, 50 week. Now we're looking at the daily on, I'm sorry, we were looking at that on XLE. Now we're looking at it on the crude future. And now we could see where I think there'll definitely be resistance near that 100 day. You can see there's a flat line, in my opinion, near there as well, interestingly. So it's still really in a downtrend, but this is a hopeful sign where you haven't really taken any highs out yet, but you do have a higher low put in. It looks a little tentative, right? Tenuous is probably the right word, but yeah, it's, what are you going to say? It's busting up against downsloping our SMAs. And oil's its own thing, but I think you run into a little resistance there. I think you're short-term overbought, but there is more room to run. So that could definitely be a pullback, take out overboughtness from the equation right now, and then go again type of thing if we stay in bull mode overall. Now, granted, that would just be a neutral to bullish news, of course, in the energy space itself. XLK, right? This has really been probably the leader. This and XLC have really been the stalwarts of late that really were the last to want to give up anything to the bearishness that was developing. And you're really close. You can see, right? This is literally less than 1% away where we close. Now you are outside of your Bollingers. You are at 82 on your hourly RSI. You're at 70 already. So, right, this could, right? There's nothing, when you see it this way, you've got to keep it, in my opinion, you've got to keep it in the back of your mind that you're kind of playing the game in a dangerous environment. It's a little more dangerous than you normally would be playing in. And so the bands are narrow, but they're not super narrow at this point. And so I would start to get a little concerned, because when you do leave your bands, as I said, up in here, there's eventually a little bit of a pause or pullback when you do this, right? So that might not be immediate, but I'm just saying, you got to, if you're operating outside of here, you got to be prepared. So with it being so short-term overbought, though, on the hourly, that should be the concern. But look, I don't really want to short this thing, right? I with what we covered in macro measure, look, this thing's got higher lows and higher highs right now, and it could actually clip its way through this one with very little effort. So yeah, I'm not going to get in, and there's a flat line there. If it takes that out, you got to figure that they tack on, they work it up towards the next levels, and that could be, several more percent higher. I think 4 to 5% higher, no problem on that, really. So just be careful, right? Even if you don't like the market, even if you're in the same macro camp, I'd still try to make money by trading it the way the momentum is pushing it, right? That's really what this is about. It's about kind of couching everything the right way and just say, look, I'm not committing to be a long-term super permeable here. I'm just trying to make some money because I think this thing's going to pop for 4 or 5% potentially, right? That's really it. And then you can always revert back. No one can stop you from reverting back to your bearish take when you want to, but you can do really well by just in the short run embracing this and being objective. What can you say? XLC, similar, right, to the XLK, maybe not as strong. It hasn't gotten up as close to the recent highs, but if I see this kind of higher low and then higher high and then higher low again, and then maybe another break up. I don't think it's out of the woods yet to really release, but I still think there's potential there. So 58 on the weekly. Let's take a look at the daily RSI. That is closer to 65. So it has a little more room than XLK, but this is actually more short-term overbought, believe it or not, than XLK. So it's got an 84-ish RSI or 85-ish RSI if I round up on the hourly. So just be careful. I'm telling you, this is just short-term overbought. These things are just short-term overbought. Continuing on, XLF daily 43, plenty of room. Obviously, there's a reason why it hasn't participated as well as other sectors have. 72 already and this could obviously be the spot where if this rally becomes undone, that financial banking area would be right the epicenter again for what's probably spreading as a contagion, not only there, but across the market, and kind of wrecking, this rally attempt, squeeze attempt that they've got going on right now. XLF, just to finish up there. So 72, if you look at it that way, it gets above the 20 there in light blue, then you go maybe to the 200-day in a buoyant market, which would be a nice little move. Not a great trader, but again, got outside of its Bollingers, and they're trying to work it back up. Nothing crazy. I think there could be at least a relief in here for a little bit. The way that looks, again, it's really about when the news falls. So I'm always reluctant to, when there's something that's got dicey news like it does right now, to just read the technicals as you would in a neutral to supportive environment. I think you have to be a lot more careful in that kind of a thing. Real estate, this also clearly joined the comeback, right? You could see 53, so there's room on the daily. However, on the hourly, it's over 76 on the RSI. So again, I'm not getting involved in that in terms of, hey, I'm going to commit to a multi-week position here at this moment. I'd rather, if we get it, I'd rather have the thing back off for a few days, cool off in ways, and then start to look like it's ready to resume. Then I would be much more committal, right? I'd be willing to commit more. Higher, low, or double bottom, it depends on the eye of the beholder. Still in a downtrend. Your 50 SMA up here on the weekly and the 200, that's dovetailing 150 not far away. So probably, right, you need to really start thinking things are legitimately better here. I think you've got to be above your 150 as it sits right now. So that's probably several percentage away. So this could move up and still be not really looking all that great. It could move up a decent amount and still not looking all that great. Bottom line on that one, XLV to me, this one, been a safer area, healthcare. If they think like they seem to be thinking, or trying to flash that they're thinking, or manipulating to indicate that they're thinking, this looks pretty good, right? Look at this long weekly downtrend. And then on our measures down here at our indicators, find support at the 150 week SMA, bounces it from there. It's right at resistance right now, and it's got momentum shifting the other way. That's really a momentum shift that's happening right there. And so, right, it just got resistance right in its way. It's got the 100, it's got the 15 week, even the 20 weeks, not all that far away. And so, right, that's the problem. It's got a lot of resistance waiting for it there. But again, if they start to really turn on the jets, could this thing work back up? Of course it could. I would just say, look, in the short run, it's overbought. You're near 77 on the short-term RSI. The weekly is clearly fine for bulls or bears, really, but we're talking about a bullish shift. And even the daily is not too bad at 56, but you can see there's a lot of SMA resistance, and there's that resistance line that we dropped in there too. It could be tweaked a little bit, but you get the general idea. We're close by to resistance, and this clearly hasn't joined the party. So you could say, well, it's a laggard then, and maybe you'll be right. But this didn't really, when there was a great January, look what happened here. So I think you have to look at that, what the specifics of what's going on with some of those components, and certainly just to appreciate the industry, or I should say sector overall. The staples have been a real stalwart. They've been hanging out really, really well. And they got I think at this point though, they're at 70 on your daily, I'm sorry, hourly RSI, 65 on the daily right now. So they're a little haywire here. Again, I think they're due to pull back a little, like almost everything is. I think that's more likely to be the case early in the week. But right, if it has a mild pullback, holds, and then goes again, I think you have to be honest and say, look, this thing probably trades up towards 77 plus, and that's where it probably hits the next big resistance level. And you might say, well, who cares, right? But we're just looking at the sector. So maybe inside of there, some staples do really well, but you don't want to draw too much from this, but there is a higher low put in. And this correction probably ran, I think it's going to be on a fib basis type of thing, 66.24, let's see up here, 77.29. So really about not quite 11 points, but if you drop back from 77.29 to 70, so yeah, that seems like the old 61.8 type of thing to me, somewhere around there. So that's not the end of the world. It's breaking through. I think that's the big thing here on this weekly, is that if we draw the most aggressive trend line that we can right there, it's breaking out and it's above all the SMAs on the weekly. So this might be an area to go look into for some of those components, which is, beyond the purview normally of what we do here. But I think short-term overbought, let it pull back, and then get your best looking technical names ready in case this market rally continues, as macro measure says that, there's a lot of reasons to believe it could for at least a couple of months. And we covered those. I mean, here's your XLY, here's your discretionary. Wasn't doing as well for the longest time, made sense, right? With this being kind of like the elastic type stuff where folks, they can get away with not buying these types of things as much, and it's discretionary, not staples. But look, above the 200 with authority, big move, really not much of a volume candle there in terms of, hey, that's some really powerful buying, but it's not terrible, right? It's not terrible. But I think, again, it's just part of this whole suspect move that feels really, what's the best word for that? Orchestrated, capitalized on, I don't know, promulgated. But what doesn't really matter, look, 63 daily, 82 if I round it up properly on the hourly. So looks great. I mean, for it to keep going without a little pullback doesn't make a lot of sense to me. I don't think you see that often, but right, there's a lot of stuff in macro measure that we can't really completely eliminate that. You could see this if it takes out that close that it had back there, that high close back in late Jan, this thing probably trades up significantly. So I think this is another good sector to go into to get ready in case that kind of that bullish April in the third presidential year, April and May play out the way that they do typically. So that could definitely be stuff to keep your eyes on. I just think your RSIs now are just prohibitive in the short run, in the weekly, and if the daily backs off, you're going to be fine to get more goosing out of that. So there's that. And then let's look at our transports. So these are important sectors, the financials, the energy, transportation's all looking better. This is a concern that we had. Those are three sectors that I learned from a partner's father who had a great deal of technical experience. I learned you've got to keep your eyes on those. And I think in most cases that makes a lot of sense. Not always, but it's good to check those out. And this has room before it even hits resistance. You can see daily RSI couldn't get too much more neutral. Hourly 73 if I round it up. So overbought in the short run, probably looking fine on, it's looking fine on weekly. So again, another one where you probably wait for a little bit of a pullback, hopefully, if bulls are smart, and I don't think they are in a lot of cases when it comes to this stuff, but if bulls are smart, they'll let this thing pull back small and then start buying again. There's nothing that means that suggests that they have to do that, but it just, I'd rather be slow and steady and grind my way up and get better prices on fills if I'm a bull, but that's not always how they operate. XLB, again, this was a big leader. We were waiting if the market somehow found a way to break out. We were saying XLB and XLI were probably two of your better sectors about a month plus ago, right? When we were back here, they were really hanging in there. Oh, oops, I'm on 4 hours. Sorry about that. They were really hanging in there. And then, right, they were struggling, and we saw other things happening. Unfortunately, right, we weren't pulled into a false breakout, which is good. And they did correct and all that kind of thing. So, but these were doing really well. They didn't bounce as much as some other areas that had really been lambasted, but they are clearly coming back. And you can see the 50 is the only SMA left there in gold. You're at a 56, 57-ish on daily RSI. Your hourly is 81. So that's already, overly toasted that way. And you're at 52. You're kind of neutral on the daily and weekly, which are the ones that really count, if you ask me, but you've got to be nimble, right? And so I think they're just overdone in the short run. So again, another one I think that would benefit from a mild pullback, find support, and then hold and try to resume would be the smart way to do it. But we'll have to broach this if it does work its way back up to this point and see what state it's in terms of a breakout. I think the more overbought it would be if and when it arrives there, the least likely I would be to just take that trade with great confidence. I'd still probably take the trade unless it's extremely overbought, but I would definitely keep it on a shorter leash if we get there. I like to see things that are more like maybe like a mild pullback. You come up to here, pull back just a little bit, and then you go. That's when I think you have the greatest chance of success in most cases. But that's just my own observation. I really can't even tell you like, hey, I did a study on that, and that turns to be true. But it's just my experience. So on this one here, it's a lot like XLB. What can you say? The little bit overbought 57. The hourly is about 74. I would say it's similar comments, so I'm going to save the time. But this has been hanging in there really well. Doesn't have much room to work back up to a key level. And if you start to see them busting this thing through, this could lead to some good trading, because there's a couple reasons for that, which may be worth sharing here. Strong move, right? Strong move up, narrow consolidation that did not give that greater percentage back yet of the gains of this strong leg up. So consolidating and keeping it in a more narrow range as it has been, while at the same time not giving all that much back, are two things that argue for a strong move that could come from this. So I think this still is a good area to keep your mind on, as much as that doesn't make sense to me. Who knows what plans the overlords have in store for us in terms of global macro or central bank developments or whatnot. So don't know there, but I wouldn't shake this one off and say, oh, I'm not, it's industrials. That's like 18th, 19th, 20th century stuff. This could still, I think, have potential. And really, if you bust through here, you're just a couple percent away from this high. And I believe, I'm not positive, but I believe that would be your highest high. And who knows, right? If the money printing starting up again, so to speak, not literally, but you get the idea that could be up and away. You just don't know. You just never know for sure. As much as my macro take doesn't jive with that, you just got to respect things until they prove that it was more of a mirage. Really close to breaking out here on the daily, right, on these utilities. I'm not sure, this is not a sexy sector. We don't, as Ryan would call it, but we still charted anyway. just problem is, we all know what the problem is, right? Even the utilities got to 67 on the hourly RSI. So, they're also overbought. We just do that to be thorough. And sometimes when we see them getting bid, we know that it's, risk off. And sometimes when they're being sold, we know that, right, it tends to be risk on. Hasn't been the case this time, probably due to the composition here too a little bit, but that's no big deal. Let's see if there's anything else we can pull. I think what we should do is stick with our SMH. We usually have a review on that, right? Yeah, because of this nice little mild pullback, it had this rebounded, hasn't gotten super overbought yet. So that's what I mean by a nice little shallow pullback. And then before you know it, you're right back at the highs. So, this stuff is overbought on a component by component basis, I think, but those charts have a explosive potential there. Now, I don't know if that's the AI is going to save us from ourselves, just the way smartphones were supposed to save us from ourselves. That spin, whatever it is, you can't deny the technicals that I think if you were in a neutral to bullish Fed, this stuff looks explosive. I mean, the Avgo, the NVIDIA chart, I mean, this stuff it looks explosive. Tesla looks explosive. A lot of these things, I know it's not a semiconductor, but I'm just saying a lot of these tech companies look like they could have explosive movement. Microsoft, Apple, we saw those things. But hourly RSI rounded off is 68. So you got to be concerned about that in the short run for that reason, but it's in an uptrending channel, right? I mean, how bad is it? How bad can we really, or bearish can we really get about it until we see more bearish price action develop? We've noted this before too, kind of has a compound or inverted compound, I should say, head and shoulders. It would seemingly would be there. And so that's also another very explosive pattern. So, I always reiterate this, and I'm sorry to have to do it again, but the reality is that we can't rule out them really doing some spectacular things yet on the upside. I would not be caught off guard personally. I would, if at the very least, if I were super short, I would be trying to hedge and see if I could buy myself more time if this scenario starts to unfold. And I can always re-engage as a larger, greater bear. If they push these things through and you start seeing this happen, this kind of some of this bullishness starts to pay off. That's in some of these charts. XHB, right through that resistance line that I had drawn, we're looking at, and the momentum is shifting in this one. You can see that below on some of our indicators. And the reality is, right, that I think this makes no sense. But how would I trade it differently? They break this thing through and the market's getting broke through, and I would just trade it because how can I rule out that there won't be another phase like that right there, or another phase like this, or another pop? They could put a nice strong pop together just like they can in other parts of the market. So I don't think this makes any sense. 56 on your weekly RSI, 73 on your hourly RSI, but I'm not going to trade it like it should make sense, because that'll just ultimately, that kind of approach has never worked for me, and that's why I stopped using it a long time ago. And I mean in the short run. In the long run or intermediate term, it's a different story. But in the short run, that just trying to force the market to behave according to your macro take is really you'll really have a tough go of it, would be my guess. Right at resistance here. So short-term overbought, do you get the pullback? A mild pullback towards a support level probably puts you down, $1 from there, maybe a little bit more. If it holds there and they try to take it, right, it'll cool off that hourly, weekly, and daily look primed to go. Probably they push you through if they're putting a bullish phase together for the market overall. So again, what are you really going to do? Let's take a look at some of those other commodities. We looked at the oil futures earlier. Here's oops, what am I doing? AG. Okay, all right. Let's do AG. Sorry. Not getting it. Okay. Not going to give that to me. Let's see, what else can I bring up then? Let me get copper. Nope. I'm not going to, maybe I have to go through futures. Let's see what it wants. Futures. We had a, I don't know if I'm, what's going on here? I'm not sure what's going on with this. I might have some brain fog or something that I'm doing this. Let me see if I can't search it that way. Okay. Oh, bear with me, please, just for a moment here. I really want to try to take a look at this, but oh, that's what it is. That is my brain fog. That's my bad. And that's bad typing to boot. Oh, come on, Thinkorswim's kind of getting a little behind on me too. And it's tripping me up. I've got metal on my mind, and that's why I'm typing the wrong and not even realizing it. Look, wow, this is really, my keyboard's now getting involved. This is really unbelievable. I feel like the Three Stooges took control of this keyboard. Okay, so yeah, so we finally got to the copper futures, and I apologize for that incredibly annoying little phase there. But here's your daily 53 RSI above all SMAs, roughly speaking, because it closed apparently right on the 50 or just about right on the 50. But otherwise, it's above all those, and you've got the higher low put in. You did have this uptrend, and now, right, maybe there's some coordination going on globally. I just don't know. But look, 55 RSI on the daily, and you've got 52 on the hourly. So this thing, if this thing starts to work up, then you've got that working up. You've got the oil suddenly, that's been getting better the last couple of days. I'm sorry, last couple of weeks. We also had lumber, which probably was telling, I think, more of the true tale of what's going on in housing. And that still looks bad, clearly, right? So here's your May lumber future. So that still looks bad. And that's why I've got ideas in on some of the home builders and stuff like that. This is still the Achilles heel besides the banks right now. For me, this is the Achilles heel of this whole situation, because I think this is such an important sector area, home building and new construction, that kind of thing. So we'll see if my fears pan out. I mean, I've said it explicitly on Cocktail Hour this past Friday. I absolutely hope to be dead wrong about all of my concerns. Let's look at the XAU. And this is one I pointed out, I think now for two cocktail hours in a row. And, I think this is overdone. Like even the dailies at 66, 67, if I round it up. Hourly here, though, not too bad, only at 54. Probably, I'm going to think at this point, with this many weeks up in a row, you're probably maybe in the high 50s on RSI in the weekly. Okay, good guess, kind of close. But that still looks really good to me. Like I've been noting, you've got this cup and handle pattern that's clearly obvious there on that weekly chart. I don't even think some of the nitpickers and naysayers would argue too much with how that fits the definition, although some may. A lot of people love having it a little more rounded, and they have a problem when it's not. But I don't really care about that. I'm not making fun of them. I just personally don't care about that. But the more important thing might be something that's similar to, akin to the cup and handle. And here's the little cup and handle inside of the extended handle here for that. And really, that's the case with SLV. We've been seeing enormous paper that I think Mikey showed, or at least we talked about. Here's SLV, similar, right? There's your monthly. I'll show you the weekly and daily on that. But SLV is a little bit overdone, kind of cup and handle, shorter term there on the weekly, 60 on your weekly RSI. So I think this is getting a little toasty, right? And it's definitely there on the daily RSI, and it's there on the hourly. So you got to be careful, right? I think you're right at. I mean, what you really want to see if you're a bull here is, and I own this stuff, like I own things that would correlate strongly to here, right? Physical silver and so on and so forth. But I'm still hoping to be dead wrong, and that things work out and this stuff comes back, because I really do just look at it as a hedge and not something I'm trying to make money on. So the only way I would really want to profit from that is if under awful circumstances. But yeah, so I think it's unlikely, and I could be wrong, right? Because news could come out. But look, to bust through all this right now, trend line, after this relentless march, just to keep going, I don't think it's going to happen. I mean, you never hear me say things that strongly, but it could. I don't mean it. I don't mean it can. I just mean I find that I would just be shocked by that, because this is really in so many ways overbought. I really feel like it needs to back off small and then go. So we have several actually at this point bullish ideas in place that have been there for a while in the sector because of all the UOA that's been coming in lately. And we avoided it, fortunately, a lot of the time because it wasn't easy to trade. But I think with this pattern now starting to really come up, you have to pay it more attention, along with the massive and repeat UOA that we're seeing. But I really think I'd feel a lot better about this after a pullback. So I would definitely be someone who, if I got into it my own way, maybe in my own, I would really have probably taken a lot of profits in terms of rolling up. And I would draw a support line underneath here. And if it cracks that, I would just neutralize my risk or get out of those rolls and then wait to see what happens. And then maybe I get a better buy-in point when momentum resumes from a lower level, or maybe it just pulls back small and then breaks through, and I start going back after it when I see the momentum shift, much like when we went from red to white there, right? That's a momentum shift. And on my basic chart here, or when RSI, which is in the gutter, then picks up and starts to go above certain levels. So you get that kind of RSI reversal, right? The RSI curl that a lot of people like to see. Oh, there it goes. So when you go from, you go from the one color and then you start picking up the momentum. So it kind of catches it pretty nicely there. But I would look for that. Now, it doesn't mean you just bail on longs, because if there's geopol or any other metals related stuff, you may want to just stay in there, because it might be one of those very rare but extreme reasons or times to be in something. But otherwise I wouldn't do it myself. Gold looks similar. I may as well do that for the record. 60 on daily, only 44 in gold because it's been going sideways. So that's not too bad. That's why that daily and hourly RSI isn't all that bad. 66 though, up here, there's the similar cup and handle, and it's right at resistance, which is what we'd expected. It's struggling, right? The resistance is holding it, probably with the great help of JP Morgan's trading desks. I don't know if they have a special desk, just call it metals manipulation desk. I don't really know, but we all know those stories. You can go find them all over the internet. But anyway, this is the bigger picture one, right? So again, this is why I keep saying if this thing launches, this could really be a big move. This is a monthly chart, and right, you're not far from the monthly highs for years and years and years. I don't know if I can get max data and go back, but this is at least right. This takes us back to 2005. So you would be making multi-decade new highs if this thing starts to run and eclipses that high and goes. So could be really powerful. I think you just got to keep that on your radar for that reason. And I think probably we should wrap on that, because I usually do cover the dollar and the VIX, so I'll just do that really quickly. But the yields are let me get this back up. There you go. So yields have tried to rally, but they kind of failed. The dollar, the dollar's been weak. It's trying to hang out. But it's got, you can see how uh, March basically reversed that little hopeful stuff we saw in February. And I don't even want to go into more details on that. So, now I think the onus is on dollar bulls. Like they're the ones that are, they're under pressure. And I think obviously that's probably, this usually moves, counter to the metals, and the metals look primed to go. And this looks like it's on the way towards maybe testing that recent low and maybe another low. And maybe that makes sense with everything that's happening in the financial geopolitical sphere with all that BRICS news and stuff like that, and the abuse, the way that our overlords have abused the US dollar for the last 100+ years. I don't think there's any big surprise there. So not a lot to say about it technically. It was more helpful to us, I think, when it was rising to help us with the bearish situation that we were embroiled in, right? Snagged in. But this looks like it's, it's not something that you're rushing to buy right away. And maybe you could put a double bottom in and maybe things change for some reason and then it gets some mojo back. But right, downtrend is still intact. You got to get above that dashed white line, which is the 100 SMA, I think, before you start feeling like, hey, at this point, if that's looking better. Real quickly, TNX, you can see mired, right? So the 10-year yield, it's making as of really midpoint of the winter time, making a little past there, maybe making lower highs and lower lows. So yields are coming off. What else is there? Oh yeah, we should take a look at the VIX. We'll take a look at the VIX and we'll kind of wrap up on this. And the VIX is telling us, and I don't know how reliable, that we've been saying this for a while. I mean, how reliable the VIX is anymore. It seems like its nature, character changed, but it's getting down there. And this is kind of a good view, right? It's like a full year, and you're far. If we do this kind of like what percentile are we in? We're not at the first percentile all the way down there, but we are certainly not near the 99th percentile up here over the last year. Far closer to the first than the 99th or 100th percentile. So with that being the case, let's look at the VIX on a weekly just to get a little more of a take on it. You got to go back, I think, to what's that, would that be late 22 right there that we're looking at? No, late 21, excuse me. So we're getting, if you take out this, the low we saw earlier this year, you're then going back a ways, and then to get to these lows, you're really going back to the latter stages of that right before the market, right, kind of ended near the highs in early 22, late 21, and then it of course, we know 22 was a really rough year for the market. The VIX did its thing, and once the market, right from here, the VIX did its thing and went. So while the market sold off. So not to offend anyone that's long the VIX or anything, but I'm really hoping that we do see the VIX really get worked down, because given my distrust of the situation overall, I would love to be able to go to the outer months and set myself up with some dirt cheap outer month downside, and from a much higher level in the market. That would fit me like a glove, the way I'm thinking about things right now. But it's kind of hard to like it. I think if you're really still worried and you think things could turn ugly quickly because of banking, you may want to start dabbling already. I think it can go lower, but let's face it, I've thought that a couple times, and they've reversed it. I kept thinking there would be a little bit lower, just because of how far down I thought they'd probably get it overdone, and they just haven't let it get overdone. What I mean by that is they haven't let it hit the lower Bollinger Band. That just hasn't happened. So it seems like there's too many people that are interested in maybe doing what we do, which is buying out of the money, very cheap, options as at highest levels, but still far out of the money. And then when volatility tends to be cheap across the board, and then using that to trade against at times, which is what we do in Phoenix portfolio. And Ryan does a great job of covering that with people, the various ways you can do things. There's other ways we're probably going to cover too, that relate to this, that are interesting ways to do things that, again, they're not really rocket science, but they can be very helpful. But yeah, I mean, if you look at that, right, you got to say, well, in the first hand, support's there. So how can you say that it can't bounce from here? It has many times. It has, right? So at the same time, though, you might see a little bounce if the market pulls back, like I hope it does. That market then puts in a much higher low and starts to go again. Then you could see maybe the plunge down, where in front of the summertime in April and May, when the summer does tend to be a little more listless. Don't know if that'll be the case this year. August certainly tends to be one of the most tedious months, which is why so many on Wall Street take their summer vacations on the second half, mainly the last week in August, and extend that through some other holidays sometimes. But yeah, so that would be a possibility. But I would be positioning for, like, at this point, I probably would look towards Nov and Feb and maybe Jan of next year. So Jan and Feb of next year, along with Nov. Those are my preferred. I prefer Nov and Feb, but I'll take Jan if that's all I can get in terms of this kind of stuff we're talking about here. But anyway, I hope something I've shared with you this week in sector situation helps you out. I think macro measure is definitely the more interesting and video, because it's a lot of things are just macro, and it's all been risk on, risk off so much of late. And so it makes it harder to really find things. But hopefully some of these things we found to take a look at and comment on are worth the while. So I hope you learned something or picked up something valuable to you can use this week or in the future. And I want to thank everybody for tuning in. And I'm going to stop the share and end the recording, and just thank everybody again. I'll see everybody through the various forms of communication, webinars, etc. this week. So thanks for tuning in.